Hey folks, what's going on? Gonna do another live stream. Been sick for a while. Didn't do one on Wednesday. I may have a few coughing fits in here. But look, for the folks who are watching the replay and for other folks who maybe don't watch my channel most of the time, let me start off by saying that I don't have anything against Russian people. I don't have anything against Ukrainian people living out here on the West Coast. I've worked with both. I've met with both, and both folks seem to be wonderful. I want to talk about the economic impact of an invasion of Ukraine by Russia. And I want to leave out all of the emotions and really all of the politics. And I want to talk about what is the strategic and economic importance of Ukraine to the United States, and what is the economic importance of Russia to the United States as well. And I've come to a pretty shocking conclusion here that actually shouldn't be that shocking if you know us fairly well, is that basically I think that an invasion of Ukraine by Russia is going to have a really short and sharp negative impact on things here in the US. And I think it's going to be very short lived. And 90 days later, all of those investors who couldn't find Ukraine on a map today to save their life are going to be back in the market, and we will have basically forgotten about it for a couple of different reasons. Number one is that Ukraine really just economically is not that important to the United States. And let's take a look at kind of the hard numbers behind that. So I'm going to bring up my screen here so we can take a look at some numbers going back to 2019. We look at the trade relationship between Ukraine and the United States here. So in 2019, which is kind of the most normal period I could go back to, we exported roughly $2.23 billion in goods to Ukraine. They exported about $1.23 billion to us. While to some people that might sound like an important trade relationship, it really is not. Even though they rank 13th out of 125 countries we're doing business with, this is not a vastly important trade relationship, particularly when you look at what we are exporting to them and what they're exporting to us. This is not indicative of a relationship between two mature economies. We exported to them as our largest export, $720 million in coal briquettes. They exported to us $462 million in pig iron. Now, the United States has plenty of iron reserves. I have to believe this was probably something that was probably required in some sort of trade agreement that we had with them, or done as a political favor. I don't know. When you look at their GDP, it's $154 billion. The US's GDP is like 21.7 trillion. So their economy is many, many, many times smaller than us, than the economy of the United States, and it simply isn't all that important. I'm sorry, it was 21.4 trillion, and this is in 2019. So their economy also isn't growing all that fast either, compared to other economies in the region, and it really lags behind when you're looking at per capita GDP. So let's move on. Thank you. Thank you, Min Tran, for the super chat. Did want to remind everyone, of course, that super chat features are on. So every time I do a live stream, I actually lose subscribers. And I know why. I'm kind of annoying, but I'm trying to bring you guys sort of the most important update information that I can find in my live streams and talk about it. This is extremely important, but I think it's far less important than it's going to seem in the immediate term. And like I said, 90 days from now, no one's going to care whether or not Ukraine got invaded. From an investment standpoint, look, guys, I'm deliberately not talking about the humanitarian issues. I'm deliberately not talking about whether or not it's right or wrong. What we're talking about is business-wise, how is this going to affect you as an investor in the United States? It is not going to have more than a short-term effect. And in fact, it may represent an opportunity to seize assets at deep value. And I know I say that a lot, but this is literally something that doesn't affect us that much, because of how shallow our economic relationship is with them. Their economic complexity score is only 0.6. They're ranked 43rd out of 146 countries in the world out there, and their economy is just really, really tiny. So even if we move on to Russia and we look at what their economy looks like in comparison to what our relationship looks like, and then I'm going to compare this to some of our larger trading partners, you're going to see that even our relationship with Russia really isn't all that important. Okay, they get far more importance because of political reasons and because of our legacy with them as an enemy than they really deserve based on their economic might. for a couple of different reasons here. So in 2019, the United States exported $9.21 billion to Russia, and Russia exported in goods rather, and Russia exported $14.4 billion in goods to us. There's a little bit of a trade imbalance here, and it looks significantly less worse when you look at what they're exporting to us, which is refined petroleum or refined raw material, and our exports to them were $3.36 billion in planes, helicopters, and spacecraft. I don't know if you know anything about the Russian aerospace industry, but they actually have fine planes, helicopters, and spacecraft of their own. Why do they need those from us? It's because they're simply not able to produce enough to satisfy domestic demand. These are high-tech manufactured products that they need from us, and they can get them from other sources, but they're not going to be as good as what we're producing. We can get petroleum from a lot of places on the planet, but let's take a look at some other numbers here. Economic complexity compared to ours. This is basically the breadth of their economy, like how much they have in terms of every sector of the economy. They're essentially a third of us. We're at $21.4 trillion in gross domestic product. They're at $1.7 trillion. So we have roughly twice the population they do, and more than 10 times the size of the economy. And we're growing at a faster rate than they are. They're not growing as fast as us. They're essentially losing economic relevance on the world stage at this point. They're not able to throw around their economic weight as much because they're not growing as fast as a lot of their neighbors are in the EU and in Asia in particular. So I don't know, and I'm not commenting on whether or not that's a reason as far as why they're invading Ukraine at this point or thinking about it. What I'm saying is economically, they're not that important. Sanctions that we put on them after this happens are going to hurt them a lot more than they hurt us for a couple of different reasons. Now, what happens in Western Europe, of course, is a different story. Western Europe is going to be hurt by higher natural gas prices, but there are other sources for natural gas. We have been building liquid natural gas receiving facilities in Europe now for the last decade. We would love in the United States, as the Saudi Arabia of natural gas, we would love the opportunity to build more of those all throughout Western Europe and start delivering natural gas. Because we're not exporting that much natural gas to Europe at this time. We'd love to have the opportunity to export more natural gas. Do you think that the Nord Stream 2 pipeline is going to happen if Russia invades Ukraine? I don't think so. I think even if it did, I think it would be in danger from terrorist activity and that sort of thing. And the Middle East, while they don't have the capability right now of shipping a ton more natural gas to Europe, that's because there aren't ships available. This can be a boon for the shipping industry as well, which is something that people don't necessarily think about. So a boon for U.S. natural gas producers, a boon for shale oil producers as well. If you look at this $14.4 billion number in 2019, the end of 2019, beginning of 2020, that is when Russia decided to flood the market with oil and crash the price. The price of oil prior to COVID dropped to $40 a barrel or under $40 a barrel. And literally the reason why, and Putin stated this on television for the whole world to see, is that he wanted to drive U.S. shale producers out of business so they wouldn't take up so much market share. With oil prices the way they are now, we're not seeing a lot of shale oil producers budge right now, but I do know for a fact that different institutions are preparing to lend to shale oil producers. They're not going to go crazy like they did in 2019 and 2020 because they understand what could happen to them again. But look, this is not a situation where sanctions are going to hurt us because they're going to turn around and put sanctions on us as well, but they don't really have anything to threaten us with. Now, let me put this in perspective when it comes to their importance as a trading partner. Russia is a country of 155 million people. And we're going to take a look at the US versus Germany in terms of exports, imports. So we export almost $60 billion of goods to Germany every year, which is roughly 6 times what we're exporting to Russia. They export to us $131 billion, which is more than 10 times what Russia exports to us. Their top product is cars, which is and our top product to them is also cars, right? This is an exchange of a highly manufactured and complex piece of machinery, indicative that our relationships between our two economies are relatively complex. Our GDP is 21.4 trillion. Their GDP is roughly 3.86 trillion. So it's 2.5 times Russia's GDP, with half the population and maybe 1/20th the actual size and resources out there. Not only that, I was looking up GDP per capita numbers just yesterday. Russia's GDP per capita in 2020 was roughly $10,000. $10,000. Germany's was 50,000. So their productivity per person is roughly 5 times what is in Russia. So Russia is a vastly it's a country with vast resources, but it's a really underdeveloped economy. So they're not an enormously important trading partner to the U.S. They're not an enormously productive country compared to some of our other trading partners. Even when we look at maybe someone that's not considered a country that's not considered as industrious, the United Kingdom, our exports to the United Kingdom were $51 billion a year. Their exports to us were $64 billion per year. Our top product to them was gold, oddly enough, and their top export to us was cars. That's really weird that in 2019, our top export to England was gold. So really, really strange. But their GDP, 2.83 trillion, once again, roughly half the population of Russia, maybe 1/30th or 1/40th the actual size and natural resources. And once again, they are 4 and 5 times more productive per capita than Russia is. These relationships are simply more important. So, not getting a lot of questions here about what's going on. I realize I'm throwing a lot of facts at you. This is what's called the OEC website. You can compare data from any country versus the United States and look at what we're exporting. So let's take a look again at Ukraine here. And if we scroll down, I don't know if that data is actually going to come up here. It looks like it's not going to come up right now. But if you scroll down at what the Ukraine is exporting to the United States, this is once again not indicative of an advanced economy. It's mostly things like wheat and corn and oils, mostly seed oils. They're one of the largest producers in the world of seed oils, but it's like canola oil, which Canada also produces a giant amount of canola oil. So the economic importance of Ukraine is not that great. Like I said again, though, setting aside the humanitarian issues here, setting aside the issues of right or wrong, I think, though, if you are looking at this as a reason to panic over the stock market, I think it's more likely a reason to think about investing when the panic hits. I think that if Russia actually invades, that reaction of the stock market is going to be short. It's going to be sharp. I mean, there's going to be a huge downturn, and 90 days later, nobody's going to care. Americans don't know where Ukraine is. They couldn't find it on the map if you ask them to try. Europeans, on the other hand, are a bit more worldly in that respect. So, but if you have questions, let me know. This is something I've been thinking about for years, actually, since 2014 or so. Actually, earlier, whenever Crimea was invaded. Crimea, basically, Russia has always wanted a warm water port, and Crimea served that purpose during the Soviet period. When Ukraine broke away from the Soviet Union, they actually had enough nuclear weaponry, to be like the third or fourth largest holder of nuclear weapons on the planet, and they gave up those weapons in exchange for certain unwritten guarantees that the United States would guarantee their safety against Russia. Now, of course, I don't think we're likely to actually follow through on that guarantee. I think we're likely to drop a lot of sanctions on them. But Chris says, what do you expect to drop the most in case of an invasion? I think that I don't think that there'd be a way to target that. I think it'd be a general market decline, a fairly substantial one. But honestly, I think some of the better opportunities would be in the more boring parts of the economy. To a large degree. I think it's going to be quite some time before we see a lot of our favorite technology stocks recover. But I think that in the event of an invasion like this, like picking up the Dow Chemicals, picking up Exxon, picking up a lot of different companies that are, J&J, that sort of thing, that is going to be a lot better, and you're going to have a quicker turnaround, I think. So I don't like to talk about market timing because over time, generally, that doesn't work out too well. I do think in this case, though, that market reaction to an invasion of Ukraine is going to be vastly, vastly overblown. So anyway, that is my opinion, and I think that you're going to see that is going to be the case. Alistair Blake says, we also live in the U.S. That looks like I mean, you can't really tell from just looking at rocks, but that looks like Arizona or something. Um, and we do like gold in the UK. Okay. Yeah, that blew me away that the largest export from the United States dollar wise to the United Kingdom was gold. That actually kind of blew me away. Um, and I wish some of this information was coming out better here. I had these charts that showed like, oh yeah, here we go. Exports, coal briquettes represented 32% of our exports to Ukraine. Cars represented 24% of our exports to them. Uh, Exports from Ukraine to the United States, pig iron, iron pipes, hot rolled iron, those sort of things are the largest exports they had to us. This is not, like I said, indicative of an advanced economy. And if we are looking the same thing at Russia, our economic entanglement with them, I think this may take a few minutes to come up here. Yep, that's exactly what it's going to do. It's building that data. So our relationship with them is they are mostly sending us raw materials. We are mostly sending them refined goods. Now, if you are familiar with the history of mercantilism or colonialism, you will see that this is a vastly unequal relationship economically that we have with Russia and the United States, despite the fact that they're selling us about $5 billion more in goods than we are from them. Eventually, we will begin to extract more and more and more out of the economy. It is an unbalanced relationship. This is one of the whole reasons why countries like China and countries like Japan did go from producing really cheap items and working their way up that value chain to producing really high value items up there. Russia is still it's still really a periphery economy compared to its neighbors in Western Europe and in Asia as well. Meaning, it mostly produces raw materials in exchange for refined and finished goods. Long term, this really isn't that great. So this is one of the other things. Like I said, is there's no material here. Oh wow, plywood. 1.2%, 1.24% of their exports to the United States is actually plywood. That's actually incredible. But I'm trying to think if there's something platinum. Maybe that's I'm sure that's a really, really important export for them to the United States. Maybe it's something we can't do without. But when we dive into this relationship, we can see that it simply isn't that important to the United States. We are completely willing to sacrifice that. And what strategic importance does Ukraine have to the United States? Russia already controls Crimea. They already have their warm water port. I think Odessa is over here, and this is the other large port that Ukraine has. If Russia blockades the port of Odessa, how is that actually going to hurt the U.S.? The biggest question here is pipelines delivering gas from Russia into Europe. If those are disrupted, I think that actually provides opportunity to the U.S. So let me see here. What did you think about what Kathy said about inflation, that it's mostly caused by a supply chain issue? I tend to agree with her. And I didn't hear that that portion of the speech she did last night. I'm referring to a speech she did earlier. I tend to agree with her. It's mostly a supply chain issue. So there's already one giant lever, fiscal policy working on in money supply right now. A giant spigot has been turned off in terms of pandemic spending, and a giant spigot has been turned off in terms of monetary policy, which is tapering. And we're looking at the Fed really probably slamming on the brakes for the March 16th meeting, barring an invasion of Ukraine by Russia. If that happens, then I don't expect there to be I expect there to be some mild panic, and I don't expect them to actually raise interest rates. But raising interest rates has already effectively happened in short-term rates. The yield curve is flattening, and things are normalizing. We're looking at credit spreads are they're improving for the banks, which means they're not improving for us. So that's already happening to a degree. And worldwide numbers have come out, and I can't remember which website I was looking on right now, but we're looking at inflation falling in countries all over the world right now. The news isn't even across the world. Like, some countries are still seeing rising inflation, but we're looking at some of our most important trading partners. The CPI and their PPIs, their producer price indexes are declining. And China is the big one. Their producer price index declined last month. So, which means that when we're sourcing goods from China at this point, it's going to be cheaper. I think there's going to be a boom in the shipping industry, though, and shipbuilding industry, which would be really great for my local economy since we have a giant shipyard here. But yeah, so I think that's one of the big stories that's going to come out is there is going to be a boom in shipping. Um, but yeah, in terms of inflation, inflation is not a subject that anyone understands with any real degree of clarity. Not even economists. Economists will fully admit this. If you're running around saying that's all due to the government printing money, or it's all due to the pandemic assistance, or it's all due to this, or all, there isn't really a clear answer, and economists don't even really know. The biggest thing probably right now that is affecting inflation is supply chain issues, and the other one, of course, is wage growth. But I think we really needed wage growth, right? And once supply chains are ironed out, remember, companies who exist in a competitive environment can't simply keep prices high because people got used to them, because they're going to have competitors who are pushing prices down so long as we have healthy markets. And one of the functions of government, of course, is to ensure that we have healthy markets. So, yeah, so I'm looking at inflation peaking sometime this year. Honestly, I think the Fed, their target, if you read the beige book going back for the last, I don't know, 70 years or so since they've had it, their target inflation rate is somewhere between 2 and 3% annually. It's been less than that for a very, very, very long time. So, and there's no evidence, of course, that we have this idea that inflation can be built up and then come back suddenly. But it feels kind of like that's what is happening here. But there's no academic evidence that's actually real. So, but in terms of Russia invading the Ukraine, that's not going to have any effect on inflation. In terms of Russia invading Ukraine and how that affects the U.S. economy, their relationship with us is simply not important enough economically to affect that. They've gotten outsized coverage in the media for political reasons, that were kind of BS in my opinion, and that's the reason why people are concerned about this now. So the same people weren't concerned when Russia sent troops into Georgia to help the North Ossetians secede. They weren't concerned when Russia basically aided rebels in the Donbass region to secede. They weren't concerned when Russia took over Ukraine. Like, these people weren't concerned then. The only reason they're concerned now is because Ukraine's been in the news so much because of certain things with the election, and that all turned out to be kind of a non-issue, or at least, like I said, I'm not getting into politics. I don't really do that. I'm talking about the economic importance of our relationship with Ukraine. It's not important. It's just not important. And the economic importance of our relationship with Russia is not all that important either. And that's one of the things. And really looking at the makeup of their exports to us versus our exports to them is one of the biggest indicators of that. Look at our relationship with Russia, which is twice the size of population, 20 times, 30 times the size in terms of area and natural resources. We have a much larger and more mature relationship with Germany. And it's just kind of hard to impress upon how unimportant Ukraine and Russia both are to the United States in terms of our economic relationship. We do tons of business with other countries. There's nothing that they produce that we can't source from other places. We have not really been buying Russian oil for quite some time. Russia is the country, though, that back in 2019 and 2020, that literally the oil crash was caused by them, literally to force U.S. shale producers out of the market. That is the reason we are not energy independent anymore. Although energy independence is probably not the concept that most people think that it is, because of, yeah. And Demo says, I don't know any of any Russian car brands. They actually produce plenty of cars. And so a long time ago, when I lived in Europe, I actually briefly owned a Trabant, which was an East German car, which is, it was amazing. It was actually a 2-stroke car. And at the time, all the cars in Europe, the Trabis in Europe, were breaking down. And anytime my car broke down, I could essentially walk 2 or 3 kilometers in any direction, and I could find the part that I needed on another car that was broken down. It was an amazing time period. But I think Lada is still around, and there's a few other car brands around. Chris Palmer, thank you so much for the super chat. I really appreciate that. Do you have any questions about, really anything at all? But I was really trying to focus on questions of the economic importance of our relationship between Russia and the United States, and between Ukraine and the United States, how that's going to affect our economy long term. And the conclusion should be it's not really going to affect the economy long term. That conflict between Ukraine and Russia and the sanctions we're going to impose on Russia will probably benefit U.S. gas and oil producers. A giant benefit for U.S. gas and oil producers, particularly natural gas. We haven't had the largest market in natural gas outside of the United States since about 2007, since the price collapse way back in 2007. And I think, and we have I think it's in Poland where we have and one in Hamburg too. The United States has funded the construction of 2 liquid natural gas receiving facilities in both of those ports. And I think it would be a great opportunity to expand, our production and the reach of our production and exports of natural gas. We are the Saudi Arabia of natural gas. The United States is. A lot of folks don't realize that. So let me see here. Any other questions? Lithium America is my favorite buy. Okay. So I would, in terms of the lithium battery supply chain, rather than owning a single stock, particularly in that industry, I think it's probably more beneficial to have a really, really wide ownership of assets. Meaning, go out and look for an ETF like BATT or LIT that focuses on owning that entire supply chain, largely because we're looking at basically a wild east here, or wild west in terms of lithium production. Lithium is not rare. Lithium is widespread. But lithium it doesn't occur in its natural elemental form because it's super reactive, right? So all kinds of new processes are going to be invented in the next 10 to 20 years for efficient extraction of lithium. I think a lot of our old methods of lithium extraction are going to exist in 10 or 20 years. We're going to be finding new ways to do this. Demand has just increased so much for this resource. So let me see. What did you make of Ukraine legalizing Bitcoin? Is it relevant to what's going on with Russia? Actually, that's something that I wanted to talk about that I wasn't sure how to fit into the conversation. Shoeless Joe, welcome from the UK, and I covered UK statistics here a minute ago. So 95% of the actual I don't know if it's 95%, but it's probably close to that. The actual transaction with Bitcoin, business being done in Bitcoin, happens outside of the United States, and a lot of it happens in Russia. And a lot of wealthy people in Russia are probably going to be converting assets into Bitcoin to make their wealth transferable, meaning that they're probably going to want to leave at some point, or at least move their wealth offshore in a way that can't be taken from them. I don't think that Ukraine legalizing Bitcoin is relevant to the situation, but I do think that this is another area that may benefit really, really hugely from sanctions placed on Russia by the EU and by the US. I think that Bitcoin could benefit massively from this, particularly Bitcoin, because of how much business is actually done in Russia with Ukraine, and of course Ethereum too would benefit as well. So FC says, thanks for your insight, Jason. Is Ukraine and Russia relations causing market sell-off, or is there something more macro, like as a reduction in stimulus? It's a little bit of all of it at this point. We got used to like deliriously high returns in the last couple of years. And I think that a return to normal for the stock market, meaning a good year in the stock market where economy is growing at 3%, 3.5%, we should probably expect to see about a 10% return in the market, right? Overall. And people really aren't used to that. They're used to wild swings at this point. And I think that returning to a calmer market, a more normalized market, is actually going to confuse people, and they're going to be disappointed by the return, especially a lot of like new investors. When is a good time to get into the market with war and inflation issues? So the war and inflation issues should really be separate. So I'm on the side of the fence that says inflation issues are transitory, and as long as we have healthy markets and competition, that once supply chains normalize, competition will force prices back down. War is a different story. I really don't think that the war between Ukraine and Russia affects anything long term. And look, like I said, I'm deliberately not talking about humanitarian issues, deliberately not talking about right or wrong, realizing I'm probably going to get some hate from this, and I'm probably going to lose subscribers over this. But I want to bring folks that are invested or that are really interested in building long-term wealth, accurate information on what I think is going to happen here. It's really I'm trying to bring you value for being a subscriber to my channel that is devoid of emotion and side taking here. So, but back to Bitcoin here for just a moment. Um, when we look at Bitcoin, what we're really looking at when it comes to Bitcoin is not a currency, it's not a network to do business on, but it's a new system, a new decentralized and global system for the transfer of value, whatever that value may be. So, conflict between Ukraine and Russia is probably going to cause a lot of really normal people who may end up as refugees converting some of their money or all of their money into Bitcoin to make it to make it portable. They're going to have Bitcoin wallets that are located not on exchanges, that are off exchanges. Yeah, so I think that Bitcoin could be one of the huge in the U.S. oil and gas industry, and actually Bitcoin could be some of the largest beneficiaries of a Russian invasion of Ukraine. And I know that's like a terrible thing to say, but it's also just, I think, just probably facts at this point. I would prefer, of course, that the new Soviet, or that Russia rather, does not invade Ukraine. But yeah, so I don't want to see conflict. I don't want to see humanitarian disaster of any sort. But in terms of what it means to the U.S. economy, 90 days from now, no one will care, because it really doesn't affect us that much. And Americans, for the most part, can't find Ukraine on a map. Any other questions, guys? Moonboy says, thanks. I know, Moonboys, you've been hanging out on my channel for quite some time. I wanted to say thank you so much. Let me see here. Any other questions that I see? Not a ton. If I don't get a few questions here in a few minutes, then we can end this. But honestly, I could stay on all day just because I've been sick for a while. This is the first time I've been able to talk for half an hour straight without going into coughing fits. But anyway, so got sick earlier this week. Originally kind of tested positive for corona. Then I tested negative like 3 times now. So I don't know what the deal is, because these are all at-home tests. But I'm not going to dwell on what I have. I'm just going to stay isolated in my office here and go for long walks out in the sunshine until I feel better. And I'm going to continue studying the economy here. If you guys have any questions about our relationship with Russia, or let's just for a moment here, let's take a look at our relationship. We looked at the United Kingdom here. Taking a look at our economic relationship with a country like China, which is the second largest economy on the planet, and take a look at how much more important that is to us than our relationship with Russia. So we exported about $9.8 billion a year to Russia in goods. We export $103 billion a year in goods to China. And oddly enough, our top product from that we export to them was $8.7 billion or $8.47 billion in integrated circuits. This is the thing that blows me away. Exports from China to the United States are 4 times what we export. It's $4.29 billion. It's not an underdeveloped economy anymore. Their top product to us, $50.5 billion in 2019, was broadcasting equipment. Broadcasting equipment? That's amazing. So they're, in terms of economic complexity, they're 29 out of 146. We are, of course, in terms of GDP, their GDP, I think the numbers are quite a bit different now. Their GDP has grown faster than ours in the last 3 years or so. But even back in 2019, they had a $14.3 trillion economy, a really fast growing economy. If we take a look here at historical data in terms of exports from the United States to China and exports from China to the United States, you're going to see that China's development as an economy and importance to a modern world economy is simply far greater than Russia's is. Their exports to us are broadcasting equipment, computers, office machine parts. These are manufactured goods. Russia's exports to the world are raw materials for the most part. They have an outsized importance that's really based on their past political importance when they were part of the Soviet Union, and economically they're far less powerful than our relationship with China should be a lot more important than our relationship with Russia. And I think moving forward, our pivot to China, which is not an adversarial pivot to China like people think it is. It's just that a recognition that our relationship with China is far more important than our relationships with the rest of the world in terms of economics. We sell them cars, planes, helicopters, spacecraft, integrated circuits. We sell them food. We sell them medical instruments, photo lab equipment, crude oil or crude petroleum, tons of things that are pretty high up there on the value chain, and they have the same exports to, or the same not not amount, of course, we sell a lot more, but the same sort of important exports to us. Our relationships are not equal, right? Our relationship with China is much more deep, and it's much more important. So if China invaded Taiwan, the economic impacts on Americans would be much bigger. Hell yes. That would be economic impacts on the world as a whole would be vastly more important. Um, I'm not saying China would never do this, but I think it's extremely unlikely that that's going to happen, that they're not willing to pay that economic price. Excuse me. Not saying it could never happen, but also remember that so actually, I'm not sure what I'm allowed to talk about on YouTube. Let's say that Taiwan is a lot more prepared militarily to resist an invasion than Ukraine will ever be. But yeah, so that is the other thing we should discuss here. They are an island. They would have to be invaded by an amphibious force. It would be a really large effort that you couldn't hide beforehand. People would know what's coming for months. There'd be no way of faking or anything like that, and you'd have to have a massive amount of people. It would be a much different affair than 130,000 troops perched on the border of Ukraine. It would be 250,000 to 500,000 people in motion. It would be really easy to see. And we would know it was coming for months. So yeah, that'd be a totally different story. And you say what you want to about China, they're not dumb. They want to improve the lives of the general population in their country, just like we do, and they understand that countries that do business together generally don't have as many conflicts. So anyway, I think that because I'm not getting a ton of questions flow in, and I can feel myself about ready to have a coughing fit, then I am going to cut this short. I meant to do this as a video, but I kept screwing it up over and over and over. So I decided to do a short live stream. Once again, I do want to say that I don't have anything against Russian people. I don't have anything against Ukrainian people. I think that the folks that I've met have all, not all, but most of them have been wonderful folks. And we have lots of those folks that live here in the western part of the U.S. And I think that it's really unfortunate that this could be happening. We shouldn't let that affect our relationships here in the U.S. And we shouldn't let this affect the way we invest either. Impacts are going to be really, really short term. Anyway, thank you so much for tuning in today. I'll be back next week, probably with my regular broadcast on Wednesday. I skipped it this week because I wasn't feeling well. But thank you so much, guys. And I look forward to seeing you next time.